Hey guys, how you doing? Alex Kerr, mortgage broker here. In this video, we're going to have a little look at Martin Lewis revealing the new 5% deposit mortgage scheme and provide some feedback. Let's go. Right, so let's jump into the video and see what our thoughts are. Let's get into the vid.
What is the new government scheme?
Well, the government seems to be very keen to stimulate the housing market. It's worth noting the housing market is already highly stimulated with prices at a record high. We've had the Help to Buy Equity loan scheme, we've had the stamp duty cut, and now we've got this new 5% mortgage deposit scheme. I do find this a little bit interesting because it's really strange, isn't it? As a nation, we whinge rightly when things go up in price and get more expensive, but for some reason many people celebrate it when house prices go up and we push up the prices of housing. Now yes, some will make a paper gain, but the truth is unless you're selling and not rebuying or selling and downsizing, house prices gains don't really help, and they cleave away so many people who will never be able to get on the housing ladder because prices continue to go up. So these continued push by the state to try and what effectively pumps the housing market, whether it helps or hinders is a question, but I'll get off my soapbox and explain what's going on.
So that's an interesting point made about an already stimulated market and the fact that if house prices go up, in effect, it's celebrated. I completely agree with this point, and also more importantly to first-time buyers, it plays a part in blocking a pathway onto the ladder for those of you trying to make that first and usually most difficult step. I also think Martin started to touch on something before then pulling back and focusing on the subject matter. But he questioned, does this scheme help or hinder? Which is a really interesting point. The 5% deposit mortgage scheme was brought back in to replace the gap left by the removal of the previous 5% deposit mortgages, which prior to this scheme did not look like lenders were going to come back to fill that void anytime soon. I do feel the 5% deposit mortgage is vital for first-time buyers, as the next step is 10%, which is completely out of reach for some. 95% mortgage, in my opinion, is far better than renting.
I do need to put a big caveat in here. The fact is there are other now 95% mortgages on the market. Not all the mortgages on the market are mortgage guarantee scheme mortgages. But the lenders who are offering it, and that includes big names like Barclays, HSBC, Lloyds, NatWest, Halifax and Santander, they're often, putting in their marketing, this is a mortgage guarantee scheme mortgage, as if that actually means something for you. Well, let me be very plain. It means nothing to you. What the government has done is put something in that enables lenders to be able to put out more 5% deposit mortgages. But these mortgages aren't special. You shouldn't go for a mortgage just because it's a mortgage guarantee scheme mortgage. If you want a 5% deposit mortgage, look at all the 5% deposit mortgages and choose the one that has the best terms.
So I just want to stop it there, as this is one of the most important parts in this video to understand about the 5% mortgage guarantee scheme. As Martin correctly points out, the scheme does not have any advantage over 95% mortgages that are on the market who are not signed up to the 5% deposit scheme. This was purely to provide some financial security to lenders in order for them to provide 95% mortgages once again. This means you need to put in a 5% deposit of the property value, so £5,000 on a property worth £100,000. Since the scheme has come out, some lenders decided to launch the 95% mortgage products without the use or help of this scheme. As a first-time buyer, it makes no difference whatsoever whether you choose to take a 5% deposit mortgage from a mortgage lender that is being supported by the scheme or from one that is not. As previously mentioned, and I will say it again, the 5% deposit scheme was there to benefit the lender. Of course, this has had a positive effect to you, as it means more mortgage products, more competition between lenders, which one would hope would bring better rates to the table.
The fact it's under this scheme is neither hither nor thither to you. It helps the lenders. It doesn't impact the borrower.
Right.
And I think there's a little bit of clever marketing hype going on out there. Get a mortgage guarantee scheme mortgage backed by the government. It doesn't actually give you anything extra. It's just the fact it's available is because it was underwritten by the government.
That's right, you should be approaching the market just the same as before, focusing on all of the products and knowing that the mortgage guarantee scheme provides no advantage to you when compared to another 5% deposit mortgage that is not being supported by the scheme. So just move forwards and carry on as you normally would. Great work on that point, Martin.
What I would say, though, is, look, I've never been a fan of 5% deposit mortgages. You've only got a little bit of cash in there, and the truth is these are still relatively expensive mortgages. The cheapest of these out there is a fix at 3.69% roughly with a £600 fee. But if you could push for a bigger deposit, your mortgage rate would be cheaper. In fact, the way it works is every 5% bigger deposit you have, up to 40%, which I know is huge, it tends to get a little bit cheaper. So certainly, look, if you're only just scraping 5% and you're desperate to get on the housing ladder, I always worry about desperation, but anyway, then you'll have to do one of these or a 5% deposit mortgage. But let's say you've saved up 8 or 9%, then I would really urge you to push to get to that next barrier, that 10% level. Or if you're on 14%, go to 15. If you're on 19%, go to 20, because the mortgage rates get much cheaper.
So this is where I'm not completely on the same page, only a little bit. I can understand wholeheartedly what Martin is saying here, and my go-to template for first-time buyers is also to try and get to a 10% deposit. You therefore have more equity in your property, your rate is better, and your monthly payments will be lower when compared to a 5% deposit mortgage. I know firsthand how difficult it is to save for a deposit on your first property, and without the 5% deposit mortgage, as we saw during the pandemic, thousands of first-time buyers were stuck with a 5% deposit and no mortgage options. This 5% deposit may have come from a gift, it may have been saved up over the last decade, your circumstances may have changed, especially with the pandemic. That meant 5% is the maximum amount you will ever be able to get. And by the time you've got 10% together, you could have been repaying a mortgage and reducing the balance. Let's say you have your 5% deposit and you're renting, paying £1,000 a month in rent. Saving another 5%, I imagine, would be a challenge, where you could be putting that rent money into a mortgage, reducing your mortgage and getting into the 90% loan to value bracket quicker than you would save another 5%. From this point, Martin goes on to talk about the more deposit you have, the lower your rate is, which is of course true, and also some information on saving through ISAs. I don't think I've ever come across a first-time buyer which, let's face it, is who the 95% mortgage is for, be in a position to get together these large deposits up to 40%, especially in an economy where the cost of living is increasing so much more and quicker than income. So for me, the 5% deposit mortgage is vital. I do want to say I'm a huge fan of Martin Lewis, and the mortgage market is a better place for having him in. You certainly won't go wrong taking on board his fantastic range of knowledge in this marketplace. Today's question, I would love to get your thoughts on this video and whether you feel the 5% deposit mortgage is vital. Without it, what options would you have? Let me know. Mortgage warning. Please note we do need to let you know that your home may be repossessed if you do not keep up with repayments on your mortgage. So thanks for watching today's video. I hope it's provided you with some useful tips that will provide you with value moving forward. Please do check out the show notes for a recap on today's video with access to any links discussed. Please do consider subscribing and ringing the bell to receive further notifications when we release our videos. I've been Alex Kerr, providing the best tools and tips to first-time buyers. I look forward to seeing you in the next video.